As we're closing down the week here, the S&P 500 is down 1.5% as of noontime. So what has spooked investors? Joining me now is Gary Wagner, editor of thegoldforecast.com. Gary, welcome back. It's been too long.
Yes, it has, and I'm so happy to be here. Thank you.
Happy to have you back and see you, Gary. So the S&P 500 falling almost 2% since Thursday. What's been causing the sell-off here?
Well, one of the beliefs is that it is the uncertainty about the current negotiations that are going on between China and the United States, whether or not they're going to make a trade deal, because that has so greatly affected the global economies. There's been a major slowdown there. The other thing is Brexit.
Okay, so let's talk more about that. Which way, how do you think that's going to play out?
You meaning Brexit?
Yes.
Well, eventually they will come to some sort of an agreement. The question is whether or not they're going to do a hard Brexit without everything set in stone, or whether or not it's going to be a completely amicable split.
Okay. And just how much of this do you think is also due to the Fed's lower growth projections? Or is it because of the weak growth data from around the world, like, poor data from German manufacturing sector, for example?
Yeah, well, that's part and parcel of the two things we just spoke about. China is such a major powerhouse that once tariffs were imposed, they already were having an economic slowdown. So this really ate into their production. And so you feel it in China, and it's a global chain that goes across the world, so to speak. And not only that, but with the uncertainty about Brexit, you are getting concerned in other European cities.
All right, let's also look now to the Treasury yield curve, inverted for the first time since 2007. A recession, as we know, followed a year later. So does this signal scare you?
Not so much. Not so much. I think the Fed has an excellent handle on working with their monetary policy. The dovish statements that came out this week at the FOMC meeting took a lot of traders and analysts by surprise. To say that there will be no rate hikes this year and one in 2020 is exceptional. The second thing that they said that I felt was extremely important was that they laid out how they're going to liquidate this huge balance sheet that they have. They said that they taper in May, they would end in September. What surprised me more than anything else was the statement that Powell made, I think at the end of February, in which he said, although we have trillions of dollars on this asset sheet, we're going to keep it at $3 billion minimum and just keep that as a reserve.
All right, so shifting gears now, bringing it home to gold, Gary. The metal is still not rallying as much as some people would like, despite growing angst in risk assets. So what's weighing it down?
Well, first of all, the risk in equities is kind of recent. We've had some down days, but we've had some genuine up days. I believe that yesterday we were about 3 or 4% from the all-time high in the S&P. So we had a scenario, as there was a very dovish tone by the Fed, in which you saw equities and the precious metals run in tandem to the upside. However, when you get really strong global news that is looking at a weaker economy globally, then you can get a sell-off in equities, and that actually, I believe, will be supportive for the precious yellow metal.
So just to bring it home here and wrap it up, Gary, key levels, what's really important for you when you're looking at gold?
In terms of gold, there was 1312, and we pretty much got right to that area, but my concerns are the two tops above it, 1330 and then 1351. Those are the two areas that we have achieved this year and proved to be resistance. But I do believe that it will break not only both of those over the next couple of months, but my current target is 1374, and that is based upon a Fibonacci extension of the last rally.
All right.
A 0.618% extension.
Gary Wagner, thank you so much for joining us. Thank you for that week recap, really. Thank you.
My pleasure as always.
And thanks for watching. We'll be back tomorrow.